up here. We had our 42 got triggered, but there was a number that came out, so we were suggesting maybe you should get out before that number is released. And that number actually propelled us up here to this 47 area. And markets being very stubborn today because it's this rally markets that don't bode too well for what we like to do. But it is what it is. You just gotta be patient. Make sure you take your stop, put your stops in place, and a nice rotation here against our 47 area. Phew! For a second there, I thought nothing was going to work. All right, so nice rotation against our 47. Hopefully, some of you were able to take advantage of that opportunity. Again, we're looking 2 to 3 point targets with a 2 to 3 point stop. And again, everybody gets in differently, but if you got in at 47, you did all right because the high there was 47.25. Sometimes it goes perfectly, sometimes it doesn't. That's why we like to scale in around the level. And if you're trading multiple contracts, if you're not trading multiple contracts, I totally get it. Then you are just taking the level straight up. All right, so there's a nice rotation there against our 47. And now we're just, again, remember these rally markets, they're not our favorites. And there's types of markets that everybody likes to trade, methodology that everybody likes to trade. But these rally markets, especially to all-time highs, close to them anyway, not our favorite markets to trade, but sometimes, we get lucky, get a nice opportunity. I don't know if it's luck, but it's something. Again, if anybody's interested in our education package, we have that in addition to our trading room here. Kind of shows you what we try to do, what to look for, kind of price action opportunities. These are just the levels that we give out. There's also price action opportunities that occurs once the market paints some bars. The combination of both those price action opportunities plus the levels that we give out gives us opportunities to trade. Remember, this is futures, not options or, stocks. It's equity futures. So it's a different animal. Big bang for your money, that's for sure, right? I would think. It is. So that's where we're at. All right, a nice rotation here against our 47. If you're trying to stay short, and if you have multiple contracts and you're peeling some off as the market goes your way, remember, we're not going to be stubborn here. All right. Again, if you're trying to stay a little short against our 47, if you have multiple contracts, it gives you an opportunity to do that. But remember, you gotta take some profits too. You just can't get on a good trade and not wish for a home run. It's not what we're trying to do here. And anybody have any questions, comments, thoughts, and ideas they want to share? Excuse me. Chat box areas where you can express those feelings. It is getting sorry I can't talk about the market much when there's not much going on. So we take what the market gives us. We're waiting for a trade to get triggered, for an opportunity to trade a support and resistance area, for an opportunity to get long or short. That's what we're waiting for. We had that opportunity just not too long ago here, where we were able to short the 47 area about 5 minutes ago or less than that, and they got a nice rotation against that short. And now, if you're trading multiple contracts, you're hoping it goes back down. Otherwise, you have a trailing stop with anything left over and try to take advantage and just get out of whatever contracts you might have left over. So that's what we're trying to do here. We're waiting for an opportunity to trade, and we just got one just not less than 5 minutes ago. And if you're still in the trade, you're hoping it continues to go lower. And I would say support right now would be around the 37 area. And there would be an ultimate target. But doesn't mean we're going to get down there. I'm just saying support, our next support level right now, based on the price action, would be down at 37. We already entered at those numbers. Yes, those numbers were there for us to use as a guide for the day. So we were short against the resistance area there at 47. You can see the 47 there. And right now, the support level would be around 37. And again, if you're trying to stay short against our 47 area there, then just have a trailing stop. And you don't want to, let that turn into a loser. If anything, the worst you do, maybe scratch it or take a little loss, but make sure you take some profits with the rest of it. And this is another way where you can, if we get into a nice area, you can probably get to take a little bit more than 2 or 3 points on a trade. Again, all depends on price action at any given moment and how you enter your trade and how you exit your trade. All right, so just a quick way of review here. We gave you our levels of resistance and support that were in the chat box area. And like I said, we used those as a guide. We came up here against our first level of 36, but probably got stopped out against it as the market kind of upticked, depending on how you got in and how long you stayed. Next level that we came up to was our 42 area where we got in, but then it was just right on the heels of a number. And so consequently, we suggested maybe we should get out of the trade because, we don't like to trade numbers. And so that market then at that point decided to push up to the 47 area where we had our level of resistance up there. And if you did take that opportunity to trade, then you hadn't made a nice little rotation off of that 47. We like to stay away from this choppiness now. If you got in and, next support level will be down at 37. And right now, this is what I like to call a no trade zone. Even though the numbers are flickering on the screen, it's kind of going nowhere fast. You'd be guessing as to which way the market would be going. And so consequently, we'd like to take at least some educated guesses as to where to enter some trades instead of just trade. At least that's what I learned coming off the floor, because learn to have some patience here, which is something that's important because, unfortunately, you need to have patience when you're on the screen here because you don't have any other thing that you can do. There's no other information. It's you and a bunch of numbers flickering on the screen, and me talking. All that combination is not good. That I can tell you. Especially since I have to hear myself talk all day long. Well, not all day, but we like to focus on the morning hours as the crux of our trading opportunities. As the afternoon goes on, the trade becomes a little bit more different. The dynamics are a little bit changed. There's less traders on the floor, more. Things can get a little bit more slippery, if that's a trading term. And so we try to stay away from the late afternoon. Besides that, gives me a chance to go play some golf, especially since I'm stuck in my basement here. Since they closed the floor of the exchanges, that's the sad part. All right, we're just kind of hanging here. No numbers coming out the rest of the day. There are no Fed speaks either. So that's about that. So it is Friday. We had, for the most part, we've had a quiet week, except for yesterday. Yesterday, when the market opened up, it was the fourth worst opening in the market ever. That's kind of goofy, but that is what they said. So we opened up like 60 S&P points lower yesterday morning. So we're just kind of hanging up here against that 47 area. Again, we're probably flat right now. If you were short or trying to stay short, had a trailing stop, you probably got stopped out and just now kind of just hanging. So right now we're kind of flat. we could do either. It can go either way. Next level of resistance we have is up here at the 53 area, which brings us back to the all-time highs. Gee, what a surprise. Yesterday, I thought we were going to move down lower and have some fun trading. And today we're talking about coming right back up here to the all-time highs. So that's annoying. So we have 53. And then anything above this, I'll give you a couple numbers here above it. But again, remember that any of these numbers above our all-time highs are just arbitrary, maybe done on trend lines or maybe some Fibonacci numbers or combination of all of those. So they're not as strong as some of the other support and resistance levels that maybe we're used to finding based on the technical work. So keep that in mind when I give you some of these other levels, especially these all-time high levels, right? So do we have 53 and then 58, and then above that we have 64, 69, and 74. Just in case this market decides to have a party up here and continue to go higher. Channels. I don't know what channels you're talking about. The charts, bar charts. It's kind of using them for technical analysis. I don't know what channel. I don't know. I don't have a channel. I don't know what channels are. I'm assuming the red and the blue line. So the blue line is just a Bollinger Band, and the red bands above and below it are just the extension of the Bollinger Bands. Thanks, Joel, for putting those extra levels in there for me. Again, like I said, just keep in mind that those levels above the 53, and again, the 53 is the all-time high, so keep that in mind. If you're trading, keep your stops in place. You just never know when they're going to, hit new highs and new stops. So, but we're talking about all-time highs yesterday as we were talking about, this is great. This is awesome trade yesterday. Not today. How are they used to trade? Well, that's we use them as kind of to help us along. I usually don't have any other indicators up there, but I do like to use a Bollinger Band. I don't use the outer extremes of those red bars so much, but I do like to use the main Bollinger Band average or indicator that's up there. As you can tell, I don't have any other indicators to help me trade. Indicators are laggers anyway, so. All right, we continue to uptick, and remember this trading these rally markets are very difficult to trade. And they are the outer bands for sure, but they're not as strong for trading purposes. We don't use them as strong for trading purposes as are good indicators. With respect to the price action, the price basically. All right, we'll continue to rally here. Next resistance point we have is the 53, which again is the all-time high. Just can't keep this market lower. I mean, it doesn't make it. I mean, well, how do you? I mean, why is there a reason to keep this market now? Well, price could be overvalued, but when the markets are in a buy mode, the determination or the equation kind of gets thrown into flux. Doesn't really mean anything because the fundamentals overtake the technicals. and it could stay overvalued for a long time. So that's why it's not a good use of that band to try to trade. That's true. That's true there, Mark. That's why it's almost impossible for, at least for the time being, for this market to kind of take a breather and go down. There's just tons of cash out there. No, you're absolutely right. I mean, that's what I'm trying to say without saying it, because I'm trying to not say. I get myself in trouble by saying I'm trying to be unopinionated here. I'm just, of course, it's hard for me to do, but I just throw some ideas out. Some of you, they're out there. It doesn't mean I'm right. It's just they're my ideas. So, but yeah, I agree with you though, 100%. There's just they're just giving away all that money, and it's just people have money and people don't even want to work. So until that changes. Yeah, so we do have the Bollinger Band on our screen. It's a blue band. And again, we don't use the other extremes because they just don't really add too much to the story here. All right, support again, 37. And obviously, I don't know if we're going to get down there or not, but technically, it's a good support level. If you buy them anywhere else, I guess maybe you could have made a case for buying it there against the 43 and change. But again, it all depends on what your goals are and what you are trying to achieve in trading. If you're a position trader, that's one thing. If you're a scalper, that's another thing. If you're a day, take a position in the morning and close it off in the afternoon. There are some of those people. That's fine too. There's a whole bunch of different ways to make money in this business. The 21-22 is settings there in the Bollinger Bands. Well, I do have my orders in place already, so I guess you would call them limit orders, right? I mean, they're already in the market, so when the market gets up to a certain level, I'm already in. So I guess you would call them limit orders. I mean, if you're trading it and you get up to a level and you decide to get in, it's a market order at that time. If you just jump in. My orders are already in place, so I'm waiting for the market to kind of, get to that level. So I guess you would call them limit orders. All right. Again, we are scalping this market. We're not taking any long-term positions. That's not what we do here. We are looking for opportunities to scalp the market, ebbs and flows. We're trying to find ebbs and flows. Again, when markets go up, there's not so much ebbs and flows. The VIX Yesterday was trading at 19. That was nice. High teens is a good number. Low 20s, there was some volatility. When it starts dipping back down, get to 17, 18, 16. We were at 16 before, even 15 handle. That doesn't bode too well for us. And that was an indication by how many trades we made. We've been making lately, where we like to average about 4 to 5 trades during the course of the day, but we weren't averaging 4 or 5 trades of course. So they may be 3 and 4 if you were maybe very aggressive and took some price action opportunities. The point here is that we have to learn to be patient and wait for the opportunities to get triggered and present themselves to us. That way, we keep ourselves out of trouble. And the objective here is to make money, not to just keep trading. So 2 objectives. You can either keep trading or you can try to trade and make money. We like the latter because we don't like to give those brokerage houses any more than what we have to give them. They're not our friends anymore. Even though I have friends in them, but that's another story. All right, we're just kind of, now we're coming down here a little bit. Support would be around the 37 area if we get down there. It's kind of a quiet trade. It kind of sucked out a little bit of volatility out of this market. All right, market is kind of just, again, this is where you have to show some patience and, kind of wait for something to get triggered. And if anybody has any questions or comments or ideas they want to share, good time to do it. Listening to me talk cannot be fun all the time, that's for sure. Right. Well, we're just kind of hovering up here on these highs. We are our entry points are based on technical analysis, not so much on a bias, because every time I seem to have a bias of the market, I seem to be wrong. So I try to stay away from biases because they don't do me too much good. So instead of coming in with a bias, I just kind of use the technical analysis to trade. That keeps me out of having a bias. Now, it doesn't mean mentally I don't come in with a bias. The problem is that every time you have a bias or you come in with a bias, you trade that bias, and if you're wrong that day, it could cost you a lot of money. So we kind of take the bias instead of coming in with a bias. You just come in with an open mind, give yourself some support and resistance opportunities based on the technical analysis that we do, and price action opportunities that occur, and trade those instead of coming in with a bias. Because that, unfortunately, I've done that one too many times and got myself in trouble too many times with that concept. That makes sense. Let's say I came in with a short bias yesterday because the market opened up 50 SM points lower. I wouldn't be doing too well because it rallied the rest of the day, right? Now you could say, well, what if you had long bias? Okay, so it did break down some more, and then before it finally, rallied. So at what point do you, so instead of just having a bias, just trade the market. And it's not that easy. I mean, this is not an easy job, no doubt about it, because, sometimes you get run over on our levels, which is fine. That's why we have stops, which we did against our first level there at 36. All right, now we're just kind of range bound here. Not our favorite trading concept, but we are range bound. Might be flagging, might be looking for the next step up. I don't know. And we love volatility, but we can't, and we love to trade volatility, but we cannot create it. So consequently, the question is that it doesn't matter really what you're trading, whether you're trading the NASDAQ and or the S&Ps or the ES. It seems like they've been knocking at resistance several times. Does this indicate the buyers are absorbing the sellers or the opposite? Well, here's what's going on there. So you got some people who are short, bears, and some people who are long, those bulls. And so sometimes you get up to a level and those bears say, okay, we're going to defend this level. And they will defend it. They will defend it. And then at some point, the bears are going to, sell it, keep selling it against a certain area, resistance, like you said. And those bulls will, try to push it through. One of them is going to win. All right. Do we know which one's going to win? I don't know. But usually, depending on the situation, usually means if we're up to new highs, and if you're familiar with the flagging concept, you would think that eventually the bulls would win, because at some point, how many contracts or how long can the bears defend a certain position, right? If you're going up, right? So, I guess the real answer is who's got more stamina, right? And it also depends on dynamics of the market at that given moment. But who's going to win is always the $64 million question. I wish I could tell you. Sometimes I would definitely jump in and tell you which way it was going to go. But every situation is different. Every moment is different. The time of day creates that difference of opportunity also. Because later in the afternoon, you can have guys who have got there's less volume, so they can take more heat and they can push the market around a little bit. But who's going to win or who's going to be able to win at the end? It's a tough call. I can't give you a straight answer on that one, but I'm just trying to tell you what the dynamics are of what's going on at any particular moment in time. And then how it plays out, it all depends on the market situation. I can't really give you a straight answer. I'm just trying to tell you that it happens. That's true. That situation does happen. Who's going to win out at the end? I don't know. Maybe you would have a buy stop above that resistance area, and maybe you'd have a sell stop below that support area. Because once it goes through, you would figure there's going to be some stops hit, because those bears are finally going to say, okay, no mas, I'm going to, get out. Again, just going to give you maybe a little bit of a bigger picture as to how that works. But again, it all depends. The dynamics of the moment and the time and how many contracts are being traded, how much volume is there, and who's doing it. Those are all things we don't know. But that's what makes trading so fun, right? We just never know. If it was easy, how fun would that be? All right, we are definitely range bound here. Unfortunately, they've really sucked out all the volatility in the market right now. But it is what it is. And like I said, that's why we try to focus more on the morning hours. It gives us good opportunities to trade. We saw how that worked out. We didn't have it. Our support level has not been really triggered, and we have the 37 area now, probably up around 39 to 40 area. It's just kind of being a stubborn little market here, kind of just holding its own. You would think it wants to go up, but I don't like to think which way it goes. I'm just keeping your stop in place if it does. But it's kind of they're really tightening up this range here. And unfortunately, like I said, that's why we like to focus more in the morning hours. Yesterday we were kind of busy, even late morning, which was nice to see. Today, not so much so. All right, we are just dead in the water. Anybody got any questions, comments? Feel free to ask. Put them in the chat box area. You can see I like to answer questions, share comments, as long as they're nicer. Well, that's a good question. If the level is on an opening, do you take it? That all depends on your risk tolerance. Some people like to jump in right away. I know a couple of our traders who wait for the first couple bars before they like to proceed because there's a little extra volume or volatility, whatever you want to call it, to come in initially as the market opens up. So as I try to explain the risk involved, and you have to make that determination on your own. But some traders, will just take it right away, and others will kind of wait. More risk averse people kind of wait a little bit for the market to settle down, or at least play itself out for the first couple of years. There's always that extra, flood of volume that's traded initially on the first couple bars. So if you're, gung ho and feeling good that morning, go for it. If you want to just wait again, but do the same thing every time. Okay, whatever you decide to do or how you decide to do it, do the same thing every time. Because one time it'll work, one time it'll, and you can't be guessing as to which one. You're either going to trade that level every time off the morning, or you're going to wait. So whatever you decide to do, be consistent, is I guess what I'm trying to say. Just looking ahead, next week we have inflation numbers coming out. The CPI and the PPI are both coming out next week. Maybe it'll give us some opportunity to trade. I'm not putting today down yet, but you never know. Just seems like this could be it for a while here. Again, we're pushing all-time highs, so where are we going? After yesterday's big break, and now buying opportunity for some people. We did have that level down there, by the way. We had the 81 area. We got right down to it. So some of our traders did well on that level because it really popped very nicely off of that level. If CPI is better than expected, look for shorts. You're asking me to have an opinion coming into a market, right? You know how many times I've seen a number come out the way exactly what I thought, like you would say there, and the market does exactly the opposite? You would expect because of a stronger number, you're saying that because of a stronger CPI number is more inflation. Inflation is going to create a little problem in the market, then you should be short. I think, first of all, that's an opinion. Technically or idealistically, that could be true, but look what the bond market's doing. The bond market, if that's the case, the bond market is telling you that's not the case. The bond market's trading at like I said yesterday, it was the first, it reached a new low at the first time since February on the yield. So I would like to say you're right, but you're also asking me to take an opinion, which I just said I don't like to take. And that's probably the worst thing you could do is like when you're trading and you're expecting something to come out and it comes out the way you expect it, and you're thinking the market should do what you're expecting it. No, again, there's so much liquidity out there, right? There's so much money that's out there, and that's the only reason that short overtime is probably, at least at this point, not. I can't say that that's true either, because of the fact. So again, I would like to, all those things that you're saying make sense, but the markets don't make sense anymore. So why is the market up here when the fear of inflation was cast upon us a month or two ago, and the bond market is up to making new lows on the yield since February? So that whole idea of inflation and fear of what's going on and interest rates going up, throw that whole discussion out the window, which caused the market to break a month ago, and now we're all at all-time highs. So, again, having an opinion, not the best concept in trading. At least that's what I found out. So I'm trying to eliminate you from having bad experiences like I have when I have opinions. All right, we are just a little range bound here. I like to call this no trade zone. That's what we're trying to do there, Max. That's the whole concept of our education course, to be able to give you show you the reasons why you would get into a trade, and the more reasons you have into a level, the more confidence you should have into getting into that trade. So again, not all of them work, obviously, but as long as we understand why you're getting into it, and then you have reasons as to getting into that trade for, and if you have multiple reasons for getting into that trade, then it's even better. Again, everybody trades differently, like I said. So not everybody trades the same, but the concepts are there. It's just a matter of where your stops are placed and what you're looking at. I mean, some people trade off the 5 minute. We'd like to. We're scalping off the 5 minute. Some are trading off the hourly, which your stops have to be a lot larger. But the concepts and ideas that we're working, that we teach, work with either market. I think a lot of other markets as well. It's just a matter of transforming them into those other markets and looking at the price action there. But yeah, not so. That's the whole point of the course. I'm also trying to stay out of trouble, right? I mean, like I said, the easiest thing to do sometimes is just to jump in and trade, because that's what we all want to do, because that's what you're here to do. You turn on your computer, you're like, okay, I got to trade now. I'm a trader. And then I tell you, don't trade. I'm telling you to be patient. I'm telling you to be, wait a little. The dollar influence your decision. Well, not as a trader, as a scalper, you are not always going to look at the fundamentals to give you a trade. You keep looking at the bigger picture, and that is going to give you a bias, right? I mean, you're telling me about inflation. Now you're telling me about the dollar. All of that stuff is good if you're a long-term trader. But what we're trying to do is we're trying to scalp the market, and all those things are obviously there, and the dollar does influence the markets and all that. I totally agree with you. But as a trader, you're not looking at all that kind of stuff, because you're not reacting to it when it's happening. You're just reacting to the market price action. That's all you have in front of you. All those concepts fundamentally are great, and you can always step back and read the bigger picture and think about it and say, oh yeah, that happened when I was trading today because this is the market broke at that moment. But when it's breaking or rallying, you don't know why it's happening. You're just reacting to the price action. Afterwards, you always find out why the market did something. At least that's how it always works out, because Goldman and Morgan Stanley, they're always the ones that get the information first. We're just trade off of their we just trade off of their good luck. Good luck. They don't have any good luck. They know exactly what's going on, right? But yeah, that's what we're at. They're getting some nasty rains out there in New York. And it's hurricane is coming up the East Coast now. All right. Well, we're just kind of hanging here. Again, like I said, I hope I appreciate the questions, by the way. So keeps me entertained. At least gives me something to talk about, because it's definitely not the market, that's for sure. Yesterday we were talking about the market. You just never know here. I thought today we might have got. I really thought this morning. This is what happens when I think. I thought this morning we were going to be a little bit busy before we jumped in here. But as you can tell, that's why I don't like to think. Yesterday, though, yesterday I knew we were going to be busy, and I think everybody knew. You're opening up 60 S&P point lower. Yeah, you're going to be busy. So. All right. Well, they eked out a new high by a couple ticks there, and coming back down here a little bit again. We have 53, got up to 49.75 up there, and coming back down again, just into the same range. It looks like it's flagging. So if you're going to take that concept, and you're looking probably at a continuation of a push upward. Where you buy it, and again, depends on how aggressive you want to be. I would say right now, if we get below 40. Well, yeah. If we depending on, again, your risk tolerance and how much risk you're willing, but if we get below 36, you don't want to be long anymore. How's that? Doesn't mean it's a long way down. So, I'm not saying we're going to go down there. I'm just saying if we get down below 36, you don't want to be long anymore. I'm not telling you to buy it. It's not what I'm trying to do. This is just a range game. I'm saying that you have to understand the concepts and ideas, and then decide whether you want to get into your trades yourself. I personally don't. I'm just saying it's flagging. If you're thinking it's flagging and you're trying to find that entry point, you got obviously the 44 area there, the 40 area. But anything below 36, if it stays down there below 36, you definitely don't want to be long. And again, if anybody has any questions, good time to ask. We might be taking a little bit of a break soon here, given the fact that I keep talking and there's nothing going on. So patience is important. We gave you the level above there at the next 53 area. That's our next resistance point. But again, keep your stops in place, especially if you get above it, you get into all-time highs. And so, but it could go retest. I mean, it did retest. It went there. This is a retest of 53 would be a retest of that previous high. NASDAQ is rocking. That's good. All right. So we seem to just kind of range bound here, as you could tell. We gave you the parameters, gave you the upside. And the downside there. And now we're just kind of, I don't know, I hope we move away from this the range, but who knows? All right, going to take a little bit of a break here. Come back if something happens. Again, focus more on the morning hours. And we'll see what, if anything occurs. You have your parameters. Again, if you're trying to buy them. Good question there. The bond market, we like to look at the bond market usually as an inverse relationship with S&Ps. Unfortunately, that these days is not the case. But because I traded in the bond market for a while, I decided to have the bond chart up there. But it does help us sometimes with equities. We don't lean on it as much as maybe sometimes we could, especially these days, because like I said, the dynamics of the markets are kind of changed, especially with all the quantitative bond buying that the Fed is doing, just pumping a whole bunch of money into the system. Yes, those are 30-year bonds. And so that's really it. I mean, I wish I could tell you we could use it to trade as well or good, but it's just sometimes it does help. I mean, lately it hasn't, as far as inverse trade is concerned. But yeah, I would. I mean, I think at the end of the day, the 30-year does kind of tell you what is going to happen overall. But again, not. It's just more of just to have it. I mean, we used to trade the bond market here in this room. And then after the 2007 financial crisis, when the government decided to jump in with both feet and legs and arms and body and decide to control the bond market by doing all the bond buying, it hasn't been a really good trade. It's been a one-way trade, basically. You jump on board, and then all of a sudden you think you got a good one, and it just totally reverses and goes the other way. So it's been a very tough trade. It used to be a very good technical trade, and we used to enjoy trading it. But I just can't say that I enjoy trading it anymore, because my goal here is to make money, not to lose. So I stopped trading. Unfortunately, stopped trading the S&P, the bond market. It used to be really good, but used to be good technically to trade, but not anymore. So that's the long and short of why we have the bond market up here with the S&Ps.
Hey, a couple quick programming notes. Want to welcome those that are coming in as a guest today for the first time, second time, or third time. In this service, we have guests, we have subscribers to Sol's daily access to his Zoom trade along. If you haven't signed up, raise your hand and I'll send you out a link to sign up for the service. Hey, Mark, welcome aboard. Hey, James. Hey, Dan. I'll send it out to you. Hey, Bevan, let me know what you're thinking. Bradley. Charles. Dale, did you sign up Dale C? Hey, Jeffrey. Hey, Max. Max, you look like a candidate. Mick. Nisa. Sandeep, you ready? Sev, let me know. I reached out to you a couple times the other day. Thomas. Hey, James is coming out to you now. Dan is coming out to you now. Just let me know back in chat that you got it. So, there's a couple different opportunities based on this service. First, there's a Zoom trade along. Well, first you're coming in as a guest, and then we quickly ask you to move over into friends and family status by subscribing to Sol's service. Sol's here on a daily basis from 9 a.m. to 12 noon. After 12 noon, he could be working with individuals that are part of his private mentoring service. So the three levels of service here are guest, transition quickly into friends and family, which is a monthly rate. It's between you and PayPal. You can cancel it. You can keep it. It's up to you. For those that are interested out of his friends and family group, you can have a private trading consultation to find out, well, for us to find out where you are in your trading, where you'd like to be. And then you're also a candidate for the discounts for Sol's private mentoring, where he takes you into private class. He teaches you his trading methodology, his price action trading strategy, like what he was doing today and why and how. You can do the same thing. How to set his proprietary scalping levels, and then what to do at those levels, the entries, exits, and stops in and around those levels. One thing I think it's important to note is that this is great for new traders that want to get set off on the right foot, looking to develop consistent profitability. And it's great for experienced traders that are looking to add to what they currently do and add price action trading into their, their repertoire, if that's the right term. Sol has developed a technique over the last 25 years or so. It does start out with identifying key areas right around the cash open. So right now it's 11:16 a.m. It is July 9th, 2021. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. Sol is trading for his own account. He's trading utilizing his price action trading strategy, the one that is showcased here through a Zoom trade along, and the one that is taught to you based on joining him in his private class and his mentoring service. The private class and mentoring service lasts a year, so that you have a lot of time to be able to be tweaked and adjusted based on the reality of the trade, and also how to set the levels, what to do at the levels, so that you're learning to do this on your own. So that's a stepping stone. So guest quickly transitions into a paid subscriber on a monthly basis, which I sent out to James right now and Dan, and we got a couple other people we're waiting on. Then you have the opportunity to set up a private trader consultation. Join us on a daily basis, receive Sol's levels right around the cash open, go through the morning session with us as a subscriber. And then you also have the opportunity to set up a time to have a trading consultation. And then based on that trading consultation, if you choose, you can certainly stay as a member on a monthly basis, or you can be part of Sol's private class and his mentoring work. What's interesting about the service here is that it's really a ability for you to develop in your art of trading. So think about that for a second. Sol has developed a skill set for himself, and it starts out with setting key levels right around the cash open. And I don't know if you missed the levels today, but I'm going to send them out to you. And again, raise your hand if you want the information about subscribing. If you get exited because you've been here and you just haven't paid, then I can't help you with that. So he had the pivot at 43.30. He had resistance at 36, 42, 44, 53, 58, and 64. 69 and 74. Hit support at 23, 14, 06, 43 even, and 42.93. And Joel, thanks for posting those. Joel was posting them for us in the chat area. Sol gives them out verbally, and then he asks for them to be posted in the chat area so he doesn't have to keep repeating them. So those are the levels. That's what Sol sets for himself based on his own at-risk trading. Okay? His own at-risk trading. He gives them out right around the cash open when he derives them from his charts. He writes them down on his trading pad. He loads them into his software. And he's very patient about waiting for the market action activity in and around those levels. Now, these are levels and zones that he is interested in. A lot of the commentary that you hear, the interaction, the talk about economic releases, some news items, really is a way to keep things going, and also an opportunity for him to distract himself from hopping into a trade he doesn't belong in, because he has pre-mapped out his day and he is looking at those areas or zones as opportunities for putting on short trades or long traders in the S&P 500 E-mini. What we ask you to do is to come in, sign up for Sol's friends and family, become part of the subscription group here, become part of the family, ask questions, interact, receive Sol's levels, listen to his commentary in and around his zones and levels, and I think start to appreciate how good his levels are. He doesn't tout his own horn. He lets the levels speak for themselves. He's also well aware that the market sets its tone after the cash open, and he is adjusting and tweaking his own trading based on that personality or the price movement, momentum, follow through after the cash open. So the opportunity here is to develop what we call consistent profitability in the S&P 500 E-mini. That's what we offer. That's the opportunity. 2, 3, 4, 5 trades during the morning session is the goal. You could bank your money pretty quickly. First couple trades, be done for the day. What's nice about the futures and particularly the S&P 500 E-mini is that when you get good at this and it becomes second nature in that kind of art form, you start raising your contract size, and now you have a business for yourself. And that's the point here, is how do you, as a attendee here from an educational only point of view, develop your skill set and turn it into an art form. And that's the opportunity that presents itself for you today. Thomas C., let me know what you're thinking. Sev, let me know if you're there. I hear from you every time to time. Let me know. Sandeep, the same. Nissa, let me know, or let us know. Dale C. Hey, Charles, how are you today? Hey, Chad, Bradley, Bevan, Sev, I'll send it out to you now. And listen, I think it's important for you to know also is that we're monitoring the people that sign up. We're monitoring the people that don't sign up and come in anyway. Sol utilizes the subscription part for those individuals that he pays attention to. You know, it's our contention and feeling if you can't afford the rate for the friends and family, then how can you afford to trade? And from an informational point of view, I find Sol's information second to none. I think you should too, but I think you have to be in a position from a experience point of view to appreciate it. And as a new trader, he gets referred people that are new, like take care of my nephew type stuff, because they know that they want that individual to be set off on the right foot and not step into it all the time based on, new trading mistakes. One of the key mistakes I always talk about is the concept of starting a trading business. And now you may be a trading business that has started for a while, and then utilizing standardized software and counting on that as a tool. Now, standardized software to me is any trading platform. This is my opinion, right? Any trading platform that people use that have all sorts of indicators, bells and whistles, flashing stuff, crosses, time frames, you name it. Japanese candles, market profile, all that is very interesting, but when it comes down to the opportunity to actually figure out how to make money based on price change and set yourself up for that is what we do here. And the other stuff is just, mind-bending. And everybody's very smart. So they take the tools that they have and they try to mentalize over them and come out with something that makes sense. And unfortunately for those individuals is that they're fighting up against everybody. It's like a huge traffic jam. But it's a psycho traffic jam. It's like what we used to see around the rotaries in Europe, when everybody is just doing their own thing and honking at each other, and they seem to make it around the bend. But in this case, you make it around the bend, but you don't make any money. And in the worst case scenario is that you know what you're doing, and after that traffic jam is over, based on an entry or a trade, based on the stuff from standardized software, is the market ends up going where you thought it would go. So insult to injury, you get hammered, and then the market goes where you thought it was going to go. And it's like golf, like you miss 20 shots and you make one good one. You're like, I'm coming back tomorrow because I had a great shot. Well, trading shouldn't be like that, but unfortunately it is. So what's the difference here? What makes this different? Why should you stay here? Why should you consider signing up? Why should you then consider to work with Sol on a private basis so he can teach you, work with you, help adjust and tweak you based on price action trading? Is because it works and it's focused. And you're not beating yourself up with all the other people that are, experiencing the heartache of the traffic jam. I I mean, if you sit there and visualize for a minute how many traders are out there actually trading, all trying to make a buck sitting in front of a trading screen, I would also say that sitting in front of a trading screen trying to make a buck and quite possibly having somebody that counts on you to make the buck and then ultimately loses faith and hits you with an iron frying pan over the back of the head because you're killing it because you're not making any money. So that's the opportunity that presents itself to you. You can either take it or not. It's completely up to you. We're offering it to you. Again, it's educational only. Nothing here is to be taken as trading advice or investment advice. This is an educational opportunity for you to learn price action trading and have yourself schooled and adjusted and tweaked based on the entries, exits, and stops in Sol's private mentoring. To get to the private mentoring part, you do need to sign up for his membership on a monthly basis, the Zoom trade along, and then we take it from there. So, Thomas, that's a good question. If you didn't, hey, Dan, thank you very much. Welcome aboard. So the private mentoring is part of the trading consultation conversation. So we do that on a personalized basis with each individual, which I think is to your benefit. So there is no cookie cutter approach to, and I should say it this way, is that a lot of individuals out there have taken the time to watch videos, get themselves set up with their software. They know what they're doing. New traders are great because they can get set off on the right foot with the right software, understanding from our perspective that we're not big fans of standardized software, and then the concept of what do I do versus what do I don't do, and how do I avoid the mistakes that a lot of people have spent years making and not really making any money, and to focus on price action trading. I would say that just talking about new traders or experienced traders, you pick up based on Sol's trading education and his mentoring over the 3 weeks, 4 weeks, maybe 6 weeks, you're really versed and start to apply. The reason this opportunity lasts for a year is because that's the start. So you're learning how to set the levels, you're learning what to do with the levels, and then you're applying it based on the reality of the cash open. The cash opens at 9:30. That's when the S&P 500 represents 500 stocks, and it's a derivative price. When that momentum and that money comes into the market at 9:30, the game changes. That day has to be identified based on your risk profile. That's something that Sol teaches you in his course and his mentoring work. The question is now that you're applying and you've done some trades, whether it's in simulation or with one contract, who's actually going to tweak you and adjust you based on your stop placement price, your entry price, and your exit strategy on that trade? Who's going to do that for you? So what we do here, and I want you to listen very closely, okay, is we take you from where you are and we hope to where you'd like to be based on your interaction with Sol. Now, Sol's class time is after 12 noon. It's scheduled personally with those that are part of his mentoring and his coursework. He goes through the material. He teaches you his methodology. And then he supports you as you apply that methodology based on the reality of the trade. And that's based on your interaction with him and your conversation, on a daily basis based on the reality of the trade. So when you sign up for Sol's monthly, then we can certainly have a private conversation and talk about Sol's course, get a quick trading consultation based on where you are, where you'd like to be. See, obviously, where you're at, right? And then present the opportunities to work with Sol as you move forward. So, James, we could certainly do that. So, Dan, that's interesting. So as a trader, when you're set up for and this is for everybody, when you set yourself up for the trading morning, from our perspective, and from Sol's trading, let's just talk about Sol for a second. I think it's important for individuals to understand what he does and how you can do the same thing if you so choose, is that Sol is very interested in his levels and very interested in the trade action around those levels. So when he gives them out to you, he's giving you what he's using or utilizing for this morning's trade as levels or zones. And when you lay them out, when he lays them out into a software, those are the levels and areas that he cares about, to the exclusion of all the other noise that is happening. So individuals that are part of the service and a subscription, when you get those levels, you're getting a really interesting opportunity and an opportunity to also focus on those areas and levels. And if, in fact, those levels and areas are really good and the market makes change at those levels, now you have an advantage over other traders because you now have better levels than they have. Secondarily, Sol's commentary in and around those levels, you'll start to pick up on pretty quickly about what he's doing, why he's doing it, and how he's doing it based on his commentary. Now, for experienced traders, they want those levels and they pay for them. Individuals that were part of the trading floor when he was down there, which, he had to leave because of the pandemic. He's been down there for 25 years or so. He had his own private booth. Individuals would pay him to receive his areas and levels for that morning's trade or that day's trade. So there is value just in his levels. Now you take that out, and then you have the commentary and the ability to communicate with him during the morning session in particular, right after the cash open for a couple hours, is really a special opportunity because you're dealing with somebody that has the kind of experience that he has. So when you ask him a question about an area or a level that he has already pre-mapped out, he's going to give you a answer that is better than the market just blinking at you and you have no idea what you're doing. From a trade point of view and who really understands what the market's doing anyway, we can only wrestle it for a short period of time with some discipline and our art form and come out with a profit against our expenses. So that's what's here. I mean, that's the point of the concept of coming into the Zoom trade along. You also will notice that Sol's charts are very direct. It doesn't have a lot of bells and whistles. The Bollinger Bands are on there, and he might have explained this before, as really a way to stay in a trade, after the fact, because everything is lagging, right? What's not lagging is that Sol is giving you levels ahead of time so that you can, if you're coming in here cold and you're like, is this guy any good? When you see the action of price in and around his levels on a general basis, I think you'd be very impressed. He does say from time to time when the market is at all-time highs or moving around up in those levels that that, or up at those heights, or if it opposite, we're going lower or and lower, that he does throw a caveat in there based on the levels, but you can identify the action and start to appreciate what the opportunity is. So this is about you as an individual being able to get better information, and then understanding you're getting better information, seeing how the market behaves at those levels, and then starting to catch on to what's happening as a new attendee in the service, or as a new trader looking to get set off on the right foot. But for experienced traders, they come in, they pay Sol for his levels, and are happy to do it every day at whatever the premium price is, because they know from their experience that day they have a better shot of making money with Sol's levels than they do with what's being spoon-fed or calculated or manipulated by artificial intelligence. Well, I think I just answered that based on. Let me know if I answered that okay for you, James. So I guess, Dan, also it's access, right? I think it's important that, let's say I was a new trader. And I met Sol at a bar. Or, better yet, somebody pointed Sol out to me at a bar. Cocktail lounge, ball game, watching a drag race. I mean, who knows? But there's Sol over there, and some guy goes, "Hey, that's Sol. That guy's one of those guys on the floor." Oh, wow, I'm really interested in trading. Do you think that he talked to me? I don't know, man. He's doing his own thing. He's on the floor. He's a nice guy. I mean, think about that for a second. You are here for whatever reason, however you found this particular Zoom trade along. You've got an individual that has been trading for 25 years or so up against what I consider the best traders in the world. He has survived and excelled in that endeavor. He has a trading history and a, what would you call it, a wealth of experience. And he is still currently trading and at risk based on the trading charts and order entry and the sort of electronic error. And he is doing it and is current. It's not like you're reading his book or watching a video or doing after hours stuff with a lot of these people, or the stuff that people do in their basement and now it's funny, I just say basement, everybody's in their basement. The concept of being able to just ask questions to somebody with that kind of experience, let alone have them take you under their wing and teach you something that they're currently at risk doing so that they have skin in the game. I mean, it is really sort of rare, and I think it should be appreciated. So in the beginning of time, people used to come to Sol on the trading floor and say, "Hey, can you teach my nephew or my cousin or, whatever?" And he used to say no a lot because he was doing his own thing. And eventually he broke down, took a few people on, and now look at him now. I mean, it's amazing. One of the things that you should note, though, is that Sol, it's a very tight group here. There are people that, can't afford to be here. There are people that don't know what they're doing. based on trading. They don't understand the risks. They're like gamblers. They just do their own thing. And then you have those people that are in the know and they're smart enough to can't do it on your own. I want to stand on the shoulder of somebody else. I want to know the tricks and the ins and outs of doing this so that I don't make all the mistakes. I just need to be adjusted and tweaked. I'm at a certain point where I just need to get over the hump, and I'm willing to pay for that. So that's the separation. So the first thing is you come as a guest, you quickly transition into a member, subscriber, part of the friends and family, and then you have the opportunity to hang out, do your thing, and then ultimately have a trading consultation, hear about Sal's private mentoring, and you can stay as a monthly. You can join him in his private mentoring, and you can go from there. Hey, Sandeep, let me know if you're back. Nissa, let me know if you're back. George P., Dale C., Bradley, Bevan. James, I'm going to take your hands down. James, Dan, and Sev, I'm going to take your hands down. Appreciate it. And if you need anything else, just, raise your hand again. It's interesting because somebody asked about algos and, what's happening based on the market, which I find curious. I think that the people that put those together are really smart. And they do algos on the fly. They also have figured out just what we figured out, just what you probably figured out, is that standardized software, which I go back to, has been created over years and years and years, right? And it has a number of indicators, crosses, time frames, things calculated for you. So I think that there is a group of individuals out there that are pretty smart and have figured out how to trade against you. Now, what I mean by you is those individuals that are like us, that are trading on standardized software, all the different platforms. And they know, based on what the platforms are doing, what it's telling people. And they take the opposite, or they run their stops. So I think some of that's going on. I also think that any automated system, let's just separate it out, because there are a lot of individuals that are pretty smart, right? We're all pretty smart. The creation of auto trading and all the back testing and all the stuff people do, that has to be adjusted and tweaked based on the open and the personality of the market, and that's why we call it an art form. And individuals cannot do that because they have to adjust and tweak based on the temperament and what's happening based on the market. So some AI is programmed for keywords and what may move the market based on, the current buzz out there. You've got individuals that are taking advantage of those that are utilizing standardized software. It's my opinion. They learned the poem and then they reversed it on the people that are novices or just don't know what they're doing, or think they know what they're doing. They just get hit, they suffer losses, right? And then you've got the individuals that try to code and come up with automated trading plans and that they back test them and try to hawk them. Unfortunately, there is no real red light, green light automated traded stuff. That's, it's gone by the wayside. And there are certain individuals that love it. I mean, they're smart. They think it's the best thing in the world to do, but they don't really make any money at it. They have great conversations about it. What makes this different is that Saul is setting himself up for himself with his key levels, and the ones I read out to you earlier, or you got in chat, or he read out to you. And then it's a matter of understanding the price movement after the opening bell and taking advantage of that price movement in and around his levels, and then going home. There's no sitting around. I would say that depending on the weather in Chicago, that Saul's already out playing golf. That he made his money in the morning, worked with the people that are part of his service, and unless he is privately working with somebody that's part of his course and his mentoring work, he's out having fun. He's banked his money for the day. Now, he doesn't make money every day, but the point is that he has learned to develop, which I think we all want, right? Freedom. To be able to come to our screens in an organized, disciplined, knowing fashion, apply our craft, make our money, and push ourselves away and call it a day. I mean, I know people that are waiting and waiting and waiting and waiting and waiting for the market to do something. It's already done it. And what's interesting about Saul's methodology, that if you asked him, on a standard day, what are you looking for? He's looking for a minimum trading profit of 2 points. That's a minimum. In other words, he'll let it run longer if appropriate, but he'll snatch his 2 points, and he'll be a happy guy. He's looking for a minimum stop. Well, actually, his stops do adjust, and he did mention that over the last couple days. But he's got a general stop of 2 points, but that can adjust. And then his entries, exits, and stops will vary based on what is happening. So think about that for a second. Let's say you were in his course and his mentoring work, and you were doing a trade this morning based on the levels, how the market's behaving. You put the trade on, you take it off, and it may have worked out, may not have worked out. But let's say you want to or have a question on that trade. Well, now you have the opportunity to ask Saul. Hey, Saul, listen, I was in at, I'm not just picking a number, I was in at 42, I went this, I did that, and then because Saul is familiar with the levels, quite possibly could be looking at that particular level at that time, he has an answer for you that's better than an answer that's a cookie cutter answer. And you are adjusted and tweaked based on that answer. And that's something that helps you get to consistent profitability and the development of your art form. So there is no, he's not asking you to change. He's asking you to add. He's asking you to focus, and he's asking you to do it over a significant period of time so that you can develop the art form. So that's a good question. So we've been asked that question before. If Saul's levels are great levels, and we've had individuals test the levels. Like if you just traded at Saul's levels, without a care, it wasn't so bad, right? And we have individuals that have collected the levels and then saw what, basically happened. But I think it's very important for you to know is that there is fluidity based on the personality of the market. And that part of the art form is taught, but it takes time for you to absorb and make your own. So the levels may be better, and you can witness that for yourself. But what do you do with the levels? Do you go short, fade trade, long, momentum trade? What kind of stop are you using based on the way the market's behaving, so you don't get shaken out or stopped out of the trade? How do you raise your percentage based on all the above for doing well in that trade versus doing poorly? And that is something that is taught. And that is something that is reinforced. That is something, when I call it tweaked and adjusted, you're tweaked and adjusted based on the reality of your trade and what actually happened. The reasons you got in, the reasons you got out, and who's going to help you with those reasons so that you can change yourself as you approach trading and those particular trades. I've had the story about people that look in the mirror as a owner of their company and also the trading talent in their company. And if you were standing in front of the mirror as the trading talent in your company against the owner, would the owner fire you? Would you fire yourself? Or would you send yourself out for training? And what kind of training would you send yourself out for? Maybe you've done a whole bunch of trading and now you just need the last piece of what you're looking for to make it work. I don't know. Everybody's different. But yes, there have been questions about, I've watched I love his levels. I want to now program into something. And pretty smart people have tried. Some people might be doing it. I don't know. But you need to have the X factor of the equation, which is what's the market price action doing as it's coming into that level. And that's the best part of this, because that's what you talk about. So, that's it. That's what we do. That's what the opportunity is. Again, if you, James, you raised your hand. Do you need something? I'm not sure. Did I take it down before? Sometimes I get caught up in my own voice and I don't see. You might be looking for his thing, right? I'll send it out to you again. Just assuming that's what it is, but there you go. And Thomas, did I help you with your inquiry? It's pretty straightforward stuff. If anybody needs a broker or that type of thing, let us know. Hey, Dan. Dan, are you saying you need something with a broker? Hey, Akil, welcome aboard. Bevan, I'll send it out to you also. Welcome aboard. So, James, so we're here from 9 a.m. until 12 noon on a daily basis. You'll get a Zoom link to come in on a daily basis, sent to your email, the email you're registered with. Saul's come in around 9:25. He'll stick around until usually 12 noon-ish, might be 11:30. Depends on what he's got going. You'll get the levels in the morning at about 9:30-ish. You go through the morning session with him. So right now it's almost 12 noon. So it's 11:56 a.m. Eastern time. So I always talk New York time because I'm in New York. Plus the cash open happens at 9:30 Eastern time. Oh, okay, good. That means that you have a pretty good, if you can get done early. And this happens all the time, like people that are over in like London or different time zones, like they're in the afternoon. If you can get your business done, and I say if, right, because there's no guarantees in anything, but if you can get your business done in the first 2 hours of trading after the bell at 9:30, that's pretty darn good because you have the rest of the day. And depending, let's say you decide that you want to hire Saul to teach you based on his mentoring and his coursework, you set your schedule with him on a private, personalized basis. What's nice about the relationship is that Saul only looks to take 6 people or less at a time in his mentoring class. So if you're one of those individuals, you're interacting with him personally. You're setting your schedule with him personally. You're communicating with him personally. So everything becomes personal. And I think that's part of his charm is to be able to do that. So Bradley, I sent something out to you. Charles, how are you doing? Everything good? Dale C, Nissa, Sandeep, Thomas C, and Akil. Hey, Akil, let us know what you're trading. And Bevan sent it out to you also. Let me know if you got it. So, Dan, does that answer your question, I hope? This is price action trading with Saul in a Zoom trade along, is educational only. I'll be in the background if anybody needs me. I think what we should do is come back, regroup on Monday, spend a couple days, and then if you want to have that private trader consultation, we can do that. If you're interested in Saul's course, let me know. Yeah, you'll get it, and you can use the same link. It's all personalized to you. So, you came in today, right? You'll get a link that you can click on and come in on a daily basis. It's not a new special link, but yes. If anything weird happens, I'll give you out our telephone number. It's 312, it's in Chicago, 312-685-5500. 2582. So let me know if you need me to repeat it again. It's 312-685-2582.
All right, we see a couple people have come in here. If you guys have any questions right now, if you want to ask me, as we just came up back here and saw that we got triggered up here with our 58 level, got right up there to 5750. We were a little concerned there with the 53 because of those old time highs and worried about what it could do once it retested. So again, you have to understand the risk involved, and that's what we try to explain. But we did get right up there to it got up to 57.75. So hopefully you were able to scale in. And again, how you scale in is dependent on your risk tolerance. 57, 57 and a half, 58, anywhere in that range. And depending on how many contracts you're trading, obviously if you're trading only on one lot and you put it in at 58, you didn't get filled. But if you scaled in around that area, you got a nice little rotation back down here. Took a little bit of time, but we got this nice little rotation back down here. Maybe you even scaled in to 53 and to 58 area, depending on, again, your risk tolerance. But the point is that I try to explain the risk, and I tried to do that before I left here as far as 53 was concerned. And then hopefully you were able to get back in there at 58 if you didn't at all. So welcome some of the new folks that are signed up here. If you have any questions, go forward right now. I've got a couple minutes here before I just came back and I just covered my trade right now. That was good because I left them in there and got filled up there at 57 and a half and had a nice rotation off of it. Oh yeah, the resistance levels obviously are resistance, so we're looking for him to jump off of that one way or the other. So support levels would be buy areas, the resistance areas would be sell areas. That's correct. So basically, you need to, some people like to wait till they get confirmation, quote unquote, whatever that means. Sometimes it might be too late. Somebody asked me earlier if I had my market orders in there; they're already in place. Let me repeat the levels for you this morning. Our pivot this morning was 43.30, 43.30. I'll give you the resistance levels here because we're going up. But pivot was 33.30. Then the resistance we had at 36, 42, 47, 53, and 58. And then 64, 69, and 74. We had support below. I'll give you just a couple here just because I don't know. I shouldn't say that because I don't like to have opinions. Below we had 23, 14, 06, and 4,300. So, so those would be, but now once the market opens up, dynamics change and you have different support levels along the way here, especially since we rallied a little bit. The dynamics have changed here a little bit. Right now, I would say that there would be support around the 50 area. And we almost got down there. We got down to 51 and change. So that almost kind of worked out. What was the 43 and a half, 43.40? So I gave those levels earlier. 43.30 was our pivot. Support was 23 below, 43.23, 14, 06, and 43 even and above. The resistance we had earlier this morning was a 36, 42, 47, 53, 58 right now, which got triggered, and 64, 69, and 74. Now, we're getting kind of one-way trade here. We talked earlier this morning about maybe it's flagging and maybe you want to try to get long and maybe you have to be careful at 53 because it's a retest of an all-time high. What we try to do here in our trading is trading education is try to explain the risk involved and why a level becomes a little bit more risky, how you would adjust to it. The levels that we gave out here are a guide to the day. They can be tweaked, adjusted. You have to understand the risk around them. And not every levels takes the same. I mean, it depends on the situation, it depends on the day. But because this was an all-time highs, it became a little bit more risky, and I kind of explained that earlier. But the 58 level worked very nicely for you if it did get in. So these are resistance. Those areas where we find the market with because we don't believe markets go straight up or straight down. Consequently, we're looking for those inflection points that create an opportunity for us to scalp the market, which means we're trying to take 2 or 3 points out of the trades. That's what we try to do here on an everyday basis, scalping the market. Try to make a little bit. Each point on the S&P on one lot is worth $50. So we're trying to get 2 to 3 points, so $100 to $150 on each contract. Sometimes we achieve that, sometimes we get less, sometimes we get more. Again, all depends on the price action. Remember, we are trying to decipher sometimes what the market is telling us and try to act accordingly. How we act accordingly is basically what we try to show you in our education course, so you understand what the market's doing, sometimes understand the risk involved and how to adjust to it. And we do this on an everyday basis. We used to do this from the Florida Exchange, but due to the fact that the exchange is no more and they've canceled open outcry, at least in Chicago. I think there's a couple in New York that are still, I think New York still got a couple pits that are open. But that's what we do here on an everyday basis. So if you have any questions, thanks. Well, I mean, how do I know what if I am only scalping, I don't know what my turn trades would be. Again, we add combination of both, right? So there was technically, if you were a little aggressive, there was a buy there above 51 based on the price action. So we need to, if we're going to do a trend trade or a momentum trade, depending on I don't know what you're asking me here, but if we're doing a momentum trade, you need the market to set it up for you so you can buy and hit the stops and move forward, which you could have made a case for above 51. Now, if that's what you're talking about, that's good. We don't try to hold trades long term. That's not what we're trying to do. We kind of react to the market price action. So trend trades, if you're asking me, did I buy it this morning and am I holding on? That's what we don't do that. Momentum trades, so those are different. Okay, so those opportunities, we have to let the market develop the opportunity for a momentum trade. And so that takes a little bit of time created by the market price action, and it did that at around the 50 area earlier this morning. So there was a little bit of a buy above the 51. Now it has to set it up that way. In this situation, it was. I even kind of explained to it, we're kind of flagging. Maybe it's a little bit of a buy above that top of the flag. I said that earlier this morning, so you kind of had to take my comments in that vein. If you did that, then again, we let the market kind of develop the momentum trades for us. I would say right now, if we get below 36 on the downside, that would be our next momentum trade to the downside, looking for a push lower below that. But again, that's because the market set it up. I'm just taking my cues from what the market's doing, not trying to guess. So that would be my next momentum trade. Well, I try to just look at the technical analysis. It keeps me entertained enough, and it keeps my mind focused versus trying to get a lot of different technical, a lot of different things in my mind to look at. Like, I don't have too many indicators up there, as you can see. I'm just basically focused on what the price action is. And since that's the only thing that's actually real time, indicators are usually lagging. The price action with the technical analysis is the most real time we have. Plus, we also look at the volume that's traded at certain levels to give us some help sometimes. Almost like, just like we focus in on the value areas that the markets create. The value areas are created by volume traded at certain levels, so that also gives us opportunities there too. So we incorporate a few concepts to help us with our trades. All right. So again, we focus again also on the morning hours. Somebody is asking me about time from the West Coast or the left coast. Over there on the left side of the map, those are that's kind of like so we're in Chicago. We open up at 8:30. That's Central Time. Mountain Time, I guess, would be 6:30. I'm guessing. I'm thinking probably. So, but that's good because you get to open. We trade for a few hours, 2-3 hours in the morning with our methodology. The price action works better in the morning hours as there's more opportunity, there's more volatility, there's more traders trading. Consequently, it becomes a little bit more active. Yes. First of all, algos are always going to be there. We never know when they're going to get initiated, right? Algorithms. We are traders. We're trying to find those levels where we think the markets are going to give us an opportunity to trade. Whether an algo becomes activated at that level or not, maybe that's trading against it, right? As far as us putting up the automating our system or methodology, again, you could do that. It's not impossible. My only concern there is that you have options as traders to get out of trades early, cancel trades, adjust the entry points because of the way the price action was. If you automate it, it becomes a lot harder for us to be able to make those adjustments quickly. And when you're trading and we get up to, let's say we got up to 57 and we had 58, maybe we make an adjustment a little bit higher. Maybe we have maybe go up to 59, and not because I'm saying that we should make that adjustment, but usually what I do with my levels, there is a backup to the level. So the backup means there's a level and then there should be a secondary level right around it, close to it, so that it'll give us a double extra support or resistance. So sometimes we have to make the adjustment to the level, the entry point. Sometimes we have to cancel it. If you automate it, those opportunities get canceled. And as a trader, as an independent trader, that's the only advantage you have, is if we have a level and we miss it by a little bit and you think it becomes a little bit more riskier to put the trade on because we just missed it, then you have the ability to cancel that trade. And I guess you do if you automate it, but then most of the time you're automating it because you don't want to mess with it. So you're not going to go and usually change it or cancel it. So you could, you could do that, but that's not what we're here to do. We're traders. If we're going to sit in front of our screen for 2 or 3 hours, 4 hours maybe, depending on how busy we are, I highly don't suggest you stay in front of your computer all day. It becomes a little bit, especially when there's nothing going on. It comes you're just fighting the urge to trade, and that becomes a little bit tough on everybody. So. And we also don't like to lose money, so that those times are, kind of stupid to trade when there's nothing going on. So, if we have a program, if we have an idea of what's going on, we have a set goals, we have levels to target, we have levels to trade around. That at least we have something to do and something to look forward to. And this is what the levels are. They're an attack at the market. It gives you opportunity to trade at a certain level and have a game plan at that level versus just trading it when it's going nowhere fast and doesn't really do anything, and all you do probably is guess wrong, or maybe you make money on one trade, lose money on the other, and all you do create is a lot of commissions for your broker, and we don't. That's the second part that we try to stay away from, is commissions that are brokers for no reason. All right, so we can see here we've gotten up to our 58. Obviously, right now the 58 is no good anymore. If you have 58 and you got up to 57.75. We made money on a 58 level. You might have not made money if you put 58 in there, but we're not using that level anymore. The next level on the upside we have is 64. So again, this goes back to your automation question. If you had this 58 level and you didn't get filled, do you leave it in? Right, but I'm telling you that we should cancel it because this is not a good. It's not a good play anymore because technically we made money on this 58. If you had 58 straight up, you obviously didn't get filled. But if you scaled in around the 58, maybe you got 57, 57 and a half, depending on what your scale is, then you made money on the trade and you should be happy. So next level above side on the upside we have is at the 64 area. Again, remember, these are all-time highs. So there is nothing etched in stone. These are just, kind of guesses. As far as a momentum trade up there, it's not setting up that way. No, it's not setting up that way from a momentum trade above 58 right now. That doesn't mean that after a little bit and price action creates different setups, maybe it would, but I would say right now, if it goes back up above 58, it's not really a strong buy. It was a stronger buy above 51 than it is above 58 right now. That could change depending on the price action over time, but if you ask me right now, if the market went up to 58 and it is going to be a good, it might be a great momentum trade, right? But as far as I'm concerned, it's not setting up that way for me. So it might be a great momentum trade, but for me, it's not setting up that way. Time of day is also a factor. You're right. That's why we kind of focus more on the morning hours. I mean, this is for us is very late for us. 2 to 3 hours in the morning trade is good. It becomes a lot differently. There's a lot less players involved. It's very choppy. A lot less players involved. A lot less volatility. So you got some people who can move the market or toying with it. But especially on a Friday in the summertime, late afternoon trade, a lot of people gone. And even if something does happen, if something does occur, you're going to get a lot of one-way trade. Because there's not enough players to stop it. So you have to take all that take that into consideration. And that's why the morning hours is trades. At least we're focused more on those hours to help us with our objectives of making money versus trying to trade all day. All right. So I hope I answered some of your questions. Welcome, and we'll get back here on Monday. I mean, as far as I'm concerned, we did okay today. The trade into the closing, I try not to, especially the last hour. Let's put it this way. That last hour of trade could go either way, and it's one way, and it becomes very, very hard to trade. I know some people love to trade that closing stuff because it moves around. You get a lot of chop stuff. And so if I'm around, maybe I'll do it, but it's like it's just guessing. Again, I don't like to guess. So I try to let the market kind of tell me what to do. So, and then you also get a lot of one-way trade at the end of the day, because again, there's a lot of players that are not in the market at that point, and the volatility is just not there. So I would definitely I don't like to trade the close for many reasons. And not that I'm not around and not that I haven't. It's just a lot riskier. And also, like I said, I like to make money. Yeah, I mean, I'm not the one to look again. I don't like to stay here all day. It's not good for anybody. Definitely take some breaks, especially after the morning hours. And if you want to come and trade the close, I would just use levels versus price action, because the price action becomes a lot stickier in the afternoon than it does in the morning. So there's times when you have to use price action, times when there's not. So there's all kinds of little, I don't want to say rules, because rules are made to be broken, especially when we're trading futures, but goals that you should look into and concepts and ideas that you should kind of focus. Well, everybody trades on Globex, right? I mean, at night you're talking about? So no, please, I do like my sleep. Let's not get carried away here. My thing about the night trading, first of all, if I'm telling you not to trade during the day when there is some volume, definitely don't trade at night when there's no volume. That's the first thing. Second thing is, I do like my sleep, and the third thing is that you got to be ready for the morning trade when it happens. So if you're going to be trading all night, I mean, not for us. Got enough opportunity during the day. That's right. All right. With that, I will leave you, and I will talk to everybody on Monday. The room obviously will be open. This charts will be up. You guys have a great weekend also. And again, so on the upside, look at 64. On the downside, if we get below 36, we might trade lower. But that would be 36. But obviously, I would not do anything. I don't like anything above support. A little bit of support around 50, like I said. But again, keep your stop in place there too if you're going to do anything. All right, get back here. Have a good weekend. See you guys on Monday.